What's up, guys? I'm just going to give it a few minutes for people to log on. Mute myself. Nobody wants to hear themselves talk. It's just me today, guys. I wanted to do a little bit of teaching. Some of you are on our team or in our chat room probably will hop on. Just gonna kind of talk markets in general, maybe specifically some stuff with crypto. There's a couple lessons and a couple moves this week, which was nice because it was across volatility. Tesla, there's a couple good lessons I want to go over on that. That's getting all a bunch of pretty much trending right now. I'll just give it a few more minutes before I get started. I'm still trading some FX today. This has been a week for me in FX. It's been pretty choppy. I haven't really gotten anywhere. I took a lot of old positions down, just kind of some aged positions. I'm pretty happy with this real money candle today. We can talk about if some of you guys are into the FX stuff. BTC hasn't really done much since that overnight flush. It's been treading water, going sideways. Kind of makes me think we have one more push. The weekends, they always tend to, the market just gets pushed around, both on the upside and the downside. So I kind of think we're going to have one more knee-jerk move. Really, it could happen either way. I kind of think it's to the downside just because we're waiting on this daily cycle. I gotta tweet this out actually. All right, I'll probably just get into some overall markets before we start training. Sometimes we usually get 30, 50 people in here. It takes people kind of a while to trickle in. So I don't want to start going over topics and then lose people. But so obviously we have payrolls today. And I think the biggest takeaway is the market understands that, unemployment's going to be low. We're at record numbers. The economy is doing great, blah, blah, blah. But what matters in macro and what matters in markets is if the number is good or bad. It's never absolute. So just like, hey, why was Bitcoin up today? Or why were stocks down? Why was the Dow down today? It's never one thing. Or why is the economy doing well? Or why is this bull market going to continue? It's never one or two things. It's in trading and really in life, it's all relative. So we don't want to think in terms of absolutes. We want to think in relative terms, and we don't want to think linear. We want to think dynamic. So what I mean by that is if you're taking a view on, say, the global economy or the US economy, you can listen on TV and you can pretty much determine who's a linear thinker and who thinks dynamically, which is more cyclically based. The Fed, for example, thinks linear. They look in the rearview mirror and then they project forward like that's going to continue forever. A lot of economists do this. All right. And so when you think in terms of absolutes, and what I mean by that is, hey, was the number good or was the number bad? Good and bad doesn't tell you anything about are things improving or getting worse? Are we accelerating or are we decelerating? So we don't care about is the number good or bad. We care about is the number getting better or getting worse. So if you go from great numbers, right, and then you start to roll over to just good numbers, the problem that a lot of Wall Street and the investment community has is they still view this as good and largely are still thinking linear. And they don't realize that, oh man, things just went from great to good. And then next thing you know, things go from good to okay, and then from okay to bad, and then bad to worse, right? Or really bad. And by the time the numbers are bad, guess what? We want to be going the other way with the cycle. And the same thing plays out. People look at the number, oh, it's bad. But yeah, but it's actually improving relative to terrible numbers, just went from terrible numbers to bad. That's actually an improvement on the margin. So we call that thinking on the margin, or that's why we look at things year over year when you want to analyze the economy. You got to compare things over a rolling period in terms of rate of change. Rate of change, that's what matters. So we know that the employment numbers are going to be good, but now the market's kind of really expecting, and usually at the end of a cycle, the last thing to pick up is the wage numbers. So now you're starting to see wage inflation pick up, and that's what the market was reading into today, and that's why you had dollar up, because if you have more inflation, front running the Feds should say that gives them a reason to be even more hawkish. So you got dollar up, and you've got rates up today, right? So bonds have gotten smoked, and then you got euro down. But on that backdrop, I think that kind of reinforces we're not playing wage inflation when we've been long dollars. We've been playing more of the growth cycle slowing. Growth cycle slowing, meaning we're coming off of some of the best economic numbers ever and some of the fastest acceleration. So once you start setting the bar quarter after quarter that high, the cycle alone becomes the catalyst, meaning that it's going to be harder every following quarter now to hit those same numbers on a relative basis. They call that the comps or a comparable period. So in the back half of this year, the probability is that growth actually slows from great to good. In rate of change terms, that's slowing because it's going to be such a high peak for the numbers to hit. You could do the same thing with inflation. When oil was so low, at some point when oil was down at what, 25, 26 bucks, the inflation numbers become such a low bar that it's very easy. A little uptick in oil and you're going to outperform the inflation numbers are going to come up so much higher because you have such a low bar. So when you hit those levels, you start to look forward and not in the rearview mirror and say, oh man, the inflation numbers are bad. They start to get a lot better quickly because it only takes a small improvement off those lows to turn the corner. But now we're actually at the opposite end of that. Inflation's been kind of rolling over off the expectation, off the peaks. But anyway, so I think today, though, now you throw in this wage inflation that the market's going to anchor on. That's even more reason for the Fed to be hawkish. So in our model, though, this is another real money candle. We were looking for lower highs here. This was a pretty good downtrend that we played late last week. And then we held the support. This was a kind of a fake out. I was hoping that would produce more follow through, but we got a bit of a squeeze back this week. These levels were right in the middle of the bigger picture range. So not a lot of edge, not a lot to do here. But now that we have this strength from the bears, that's a big bearish footprint right there. So this candle should produce more follow through to the downside. And so into next week, I'm back leaning short, core short euros, kind of came in pretty delta neutral, meaning kind of flat without closing out all my positions. Just hedged up tight so that it didn't have risk either way. But now we're leaning back short. So anyway, that's the dollar view. I don't know why I got onto that. I guess just because of the economic numbers. As far as BTC, we still have this weekly lower high we've been talking about play out on the higher time frames. The daily cycle is coming down. So since we signaled sell here in front of the trend line, the cycle was high. Now we're rolling off the top and coming back down. So I think you can be a little bit patient. Maybe on Sunday, I think kind of the timing will line up a little bit better depending on where price is, that maybe kind of add back to some stuff around 6,000. Maybe I'll nibble on some ether down there if BTC is at this big picture support again. But what I kind of wanted to talk about, a couple of concepts today, I'll just give out and teach to people. And two of them are around time, the cyclical concepts that we use. So not a lot of people teach this idea of time, but you got to get into the fourth dimension. So everybody pretty much used to trade on fundamentals and valuation before you had charts. So technical analysis really didn't come on the scene until the 80s. Guys were still drawing a lot of their charts by hand, and it was tough to kind of, if you were a technical analyst, you had to kind of do a lot of work to sell that. Everybody thought it was voodoo. So that's the fundamental view. And then you have technical analysis. Everybody pretty much understands and studies and uses now. But then there's this idea of cyclical analysis. And I think that's kind of the next area that kind of need to lead the way on, and people need to start understanding this concept of time and cycles, and just making excuses like old Wall Street does that, hey, you can't pick tops, you can't time the market. That's just spoken from people that can't either trade, or they don't even try to time the markets, or they're just horrible at it and they want to keep you invested so they can get their commissions, etc. But that's crazy. You can pick tops, you can pick bottoms. We do it a lot, but you got to have this understanding of cycles, and that's what's kind of the key to the consistency on that stuff. So there's two concepts on that today, and this is stuff that we go over in our course. I guess let me just share that information now. But our course is 9 hours long, and I teach our entire model. So this is everything that I built over 10 years trading institutionally. Cash treasuries, covered all the primary dealers, a lot of big money, buy-side money managers and hedge funds. And this was our directional model, but we did this stuff all day long and still do. But blockedgecapital.com, under the education here, what's going on, Marcus? Yeah, anything can happen, partner. We could see a squeeze. You could see them blast the market to new lows. I want to talk about this need to know in the psychology of trading. So there's two cyclical concepts we're going to go over, and then one of them is going to be about the psychology of trading, because it's pretty prevalent in crypto and in markets in general. Is this, people have this need to try to figure out what's going to happen next. And I'm going to show you guys the complete opposite thinking of that, how freeing it is and how much it will actually help you in your trading. That when you let go of this idea of needing to know, and then you embrace the risk and the uncertainty, that's actually the state that you want to be trading from. It's, if you're constantly having anxiety trying to figure out what's going to happen next, It's actually the complete opposite of what you want to be doing. But anyway, so under our educational stuff, this is our chat room to come in and kind of join us every day, see what we're about, what we have going on. This is our community. We're building out a trading platform that a lot of this will be done through our Rhythm trading platform that we've been working on. But I don't want to get into that. And then this is our crypto room. That's only $99 a month. We're actually putting our signals in there and talking about the overall market and everything in between, from mining to, I don't know, masternode conversations. This is the course I was talking about. So just a taste of that today. I'm happy to share some stuff I think you guys could take into next week, or that'll really help you in your trading. And this is for my group that's pretty dedicated. They want to trade for a living. They want to trade, maybe get out of their jobs. I have a few of them full time now. They're doing really well. I've taught several traders, even on my desk when I teach junior traders, never traded fixed income or traded bonds, and completely on their own, high six-figure incomes now. It's all the same stuff, but we trade together every day, or not every day, sorry, twice a week. Trade a lot of Forex, wherever the opportunity is, really. But this is some of the things that I'm going to show you. This is our model, and our training is based on 3 pillars, which is execution, analysis, and then actually the risk side, which has a lot to do with your trading plan, psychology of trading. But you can see in this model, this is some of the slides from what we go over. This is everything from why do cycles work? What's the history of the business cycle? I've got charts in here I did on Bloomberg back to the roaring 20s. The global business cycle is on an 8.6 frequency, and that same frequency plays out in Bitcoin. Like, it's actually dominated the weekly chart of Bitcoin. So I don't know, I think it's fascinating, especially when you look at history and you start to see these moves. Like, I'll just show you guys right now. This is the Dow in the roaring 20s, and they wrote about the Gatsby stuff and all that. And the cycle, this frequency, there's lots of different cycles and waves, just like in physics in general. But the 8.6 wave largely kind of looks like this. And then it repeats back up. So peak to trough, or peak to peak, is 8.6 years. All right. And then it's 4 years, obviously, from peak to trough. Peak to peak, it's 8.6 years. And then you have minor turning points inside of that 4 years down, you have turning points. So anyway, this isn't about highs and lows. Cycles aren't about that. Cycles are about turning points. Obviously, if it was just highs and lows in absolute terms, you would never have any advance or decline, right? It would just be a sideways range trade forever. So what you tend to look at is what breaks out and what peaks, and parts of the world will do this. Asset classes will do this. Everything is connected. So you might have a high in the dollar, and you might have a low in gold, and commodities might peak with the global business cycle. You might have real estate peak. 2007, you saw real estate peak to the exact month of the global business cycle. But everything moves in waves and cycles. So anyway, this was 1921. You had the peak. We broke out in 1925. The ECM bottom. The ECM stands for Economic Confidence Model. I won't get into the too much of the history of it, but Dow breaks out and actually rallied 4 years, peaked exactly with the month September 1929, and then this is the big crash that most of the history books write about, why he had the Great Depression. We actually bottomed before the ECM bottomed in January 1934. Well, you based, then you broke out and rallied into this turning point to the exact month, April 1937. Had a down move, again bottomed with the global business cycle 1942. And then you had another rally just where price peaked just before the ECM. And then we actually had another cycle down and another turning point where it didn't produce a low, it produced a breakout, a new high, and then you rallied into, I think that's 1955, 1956. This was a huge move in the Dow. But anyway, we get into this stuff in the model. So the things I wanted to just teach on today, and I'll show you guys examples and some of the moves this week, are just scratching the surface of the stuff we go over. You guys get the point. So let me switch back to different screen. I gotta check FX here real quick. Or where are the shorts right now? GDAPs. I haven't really looked. I don't know what's the best metric to look at that. I think I saved a couple websites that try to track it pretty good. I think the CBOE, the options stuff, the commitment of traders report on Bitcoin is starting to be more helpful. I just haven't seen it. It's usually weekly. Euro's kind of going sideways here. Euro pound's creeping back up. That's good. A little bit long there. Just sold some euro versus pound. Dollar Swissy's back on the highs. That's good. Long there. All right. What are you guys using to look at that? You say that the shorts are at all-time highs. What are you using to look at that? Joe, so yeah, when you have multiple waves converge, yeah, absolutely. And that's true in physics. Like if you ever hear about rogue waves, some of the thinking around the Bermuda Triangle is kind of around this, that you have a convergence of different waves coming from multiple directions. And but anytime smaller waves kind of coincide and they start cycling together, you'll get confluence that creates a much larger wave. And so we try to apply that same thing through time cyclically. But then also you need to look at it as overall markets. I mean, when you start to have, which is kind of happening right now globally, when you start to have China rolling over, growth in China is rolling over. You have Europe's been slowing all year, really starting last year, the end of last year. You start to see their stock markets all sync up and roll over. If you look at the MSI World Index, everything in equities is rolling over, and the only thing that's still rising is the US. So we kind of have a divergence there. But those are some major waves that they all start to line up. Usually you're going to see a big global risk off move. You start to see EM, emerging markets have already started rolling over. The dollar has been strong. Those are kind of the bigger waves that are lining up global macro. But yeah, for Bitcoin, I mean, I think that's why September, I think, could be a really big turning point here. Especially that third week. I think it is the 18th. Let's see where I wanted to start. Let's start with the cyclical concepts, and then I'll say why, once you understand some of this timing, why you don't need to know what's going to happen next. And then you can just trade what is. What I kind of mean by that. Let's just take, I know some of you guys want to talk crypto, but this is What's great about our model is it applies to all markets. So it doesn't really matter what chart you're looking at. This same kind of stuff applies. But we've been pretty bearish on Tesla for a number of reasons. I mean, fundamentally, I always thought they had enough reasons to think that it was overpriced. But I don't trade on the fundamentals as my lead decision. So like valuation is never a catalyst. The timing matters. And so if you have growth accelerating like we've had since the election on the US side, that's not really the time to be looking for a lot of shorts. You want to be buying the dip on equities. But since we've come into the summer here and the back half of the year, our opinion is that growth has a pretty higher probability of actually slowing into the fourth quarter, especially the fourth quarter. And that's true across countries. But the US is going to slow here most likely just because I already kind of explained we've accelerated so quickly. So while everybody's projecting that that's just going to continue for years with no dynamic cyclical thinking that, man, we've accelerated so fast, it's going to be really hard to maintain that in the numbers. So the odds are actually that you're going to slow from great to good. And so when things start to slow, and you already have Europe slowing, you already have Asia slowing, bad things happen. So that's when you want to start finding things on the short side. So Tesla was one of the names we liked shorting on a short bench, but you also want to time it up with the overall market when it's at the top end of the range. So we want to do this with Bitcoin too and the altcoins. If altcoins are cheap, or if we think we're about to make a big turn in the market, if I like something like, 0x or Binance or, Aeon or something like that, if I'm going to buy 0x, I don't want to buy it when we're on the highs of the range. We want to buy it at the low end of the market. And so if Bitcoin is basically the overall market right now, the same thing what we do with S&Ps, when stocks are up on the highs like this and we're extended, this is when you want to be looking to put some of your shorts out. So I might have a portfolio where I have 5 long names like Apple, or pick whatever companies you like on the long side. And then you want to have some names you like on the short side. And when you get low within the range, you're buying the stuff you like Apple. Like we were buying Apple down here. And when I get high within the range, now I'm looking for my stuff on the short side to hedge my portfolio. That's how you run a real long short type of hedge fund or portfolio. You'd be buying treasuries up here and coming out of your stocks. So you're adding and reducing, kind of like 2 empty glasses of water. You're pouring some of the water into the one cup, and then you're slowly pouring it back into the other cup, and you're going back and forth. You're adding to your longs and your shorts at the top of the range, bottom of the range. And so Tesla was one when we were on high within the stock range, the equity range. You start putting out the puts. And then like today, here we had S&Ps on the low. We were selling our puts and covering a lot of this stuff. And so it's kind of this back and forth that you can do between markets, between, globally, between the dollar, risk off, you're buying treasuries. When you have a big move, it's risk on, you're lightening up on your stocks, you're buying more treasuries. When you get risk off, today, another example, we like to trade the VIX. When stocks are high within the range, that means the VIX is usually low. So you don't want to be panicking. You don't want to be buying the VIX on days when stocks are down. You want to be doing the opposite. So we think growth is slowing, so we like being a little bit more aggressive on volatility. We're buying the VIX down here when stocks were on the highs. And then today we're taking profits on that stuff on stocks are on the low. So that's another example of just adding and reducing. But that said, so on these concepts, these cyclical concepts. So pi is one that we like to use. I've shared this pretty openly. This blue dashed line is our pi line. And all that is it's a 314 period moving average. It's not rocket science. It's just a simple observation / discovery I made. I wanted a moving average that was a little bit longer than the 200. Everybody has the 200, but not many people have anything longer on the chart. But this isn't just about an average of price and a stupid line on the chart. This is a cyclical component because you're taking 314 periods or units. And so pi is 3.14. I just times it by 100. But back to the 8.6 frequency, 8.6 years is 3,144 days. So you see this, you see pi and derivatives of pi show up everywhere in nature, physics, mathematics, and it's a great cyclical concept that works in markets, something you guys could take into your trading pretty much immediately. And I'll show you kind of how ways to use it. All right. I wanted to do some on BTC. All right, I'm going to go to the cash chart for that in a second. What questions do you guys have? I don't want to just talk at you too. I'm trying to teach, but it usually means I ramble more. End of September's Q4 for BTC. Yeah, that's a great point. We kind of tend to ramp it up into the end of the year. Uh, 130 was kind of one of our targets. I was trying to be pretty vocal about letting this daily cycle play out, and you're probably going to get lower levels on a lot of alts. Well, this is just since I have it up. So when we play the volatility on S&P, basically it's playing the ranges on stocks and the fear factor. You're buying calls lower than the range, but price will tend to cycle away from this average and come back to it. So you have away from it, come back to it, come away from it, come back to it. And there are certain things you can look for when you break trend, that once you break trend, you can be a little bit more confident that the market is going to have a bigger pullback. And a lot of times you'll go all the way back to pi. I'll show you some stuff on crypto along those lines. But like here on the euro, since we were talking big picture, global macro, the daily level, we have a multi-factor model too, which means you're not just looking at one duration or one thing. You got to look at lots of things over different time horizons. But most of this dollar squeeze, you can see here on the 8, there's two different time frames here. There's the longer term downtrend that's still intact. We failed right here at the bands and underneath all these lower highs. All right, so that's a daily or weekly time frame. And then the intermediate term was bullish for the last couple of weeks here in August, and then we starting to roll back over. I don't know if you guys can see that, but you see the 8 starting to roll back over here. Just like the 8's rolling over on BTC. So that's this 8. Keep an eye on that 8. It's always going to kind of give you the underlying direction of the smaller time frame. So here on the daily, that's not a very good D. Daily and weekly is the longer term time frame. This 8 is showing you the intermediate term time frame, meaning the hourly and 4 hour. So here's the 4 hour. Now notice pi here on the 4 hour is actually sideways. It's kind of showing you more. That's indicative of a range trade. And that's exactly what's kind of been going on with the euro this week. We were above it, traded below it, traded back above it. Now we're back below it. But we are making lower highs, right? And then we had some lower lows here. And you can see it on the hourly also. You'll see that the hourly, we're trying to roll this pi line again. The 200's rolling. That's kind of what you see on the 8, direction of the 8. And then we can see that pi here was rising during that intermediate term uptrend. I should draw it in green. It was rising. And now it's kind of went neutral and it went sideways. And now it's trying to roll back over. But you see how price moves away from it and then cycles back to it. Moves away from it, cycles back to it. Moves away from it. All right, so let me go into some of the cash charts on Coinigy. The shorts on Ether across all-time highs. Wow, that's pretty contrarian indicator. Makes sense though. Everybody's chasing into the lows. Oh, so I just had the EOS chart up. Let me go back to that. 216. Just nasty. Have you guys seen all those? I tweeted out a couple of charts. I didn't know they had this thing called a DApp capitulation, showing all the coins that some of these that are getting moved onto these exchanges, all the Ether. I think that's really helpful. It makes a lot of sense. I mean, it's just a shame that these guys are puking on the lows that raise so much money. I mean, I hope that's like the last few of their Ether coins. Hopefully they were selling stuff at like 600. And there was plenty of sell signals along the way here. I mean, we broke the bands back here. 640, 600, 590. What is that doing? Oh, EOS. EOS. So this was a pretty good sale we had. Just a simple cyclical concept in the model. But we bought well on the 4 hour. And then we had about a 12, 13% run into our pi line. That's the dotted green line here. And so we booked some gains. If you don't sell up there, you kind of waste your time, right? If you're just in the business of hodling, you're just it's not a risk management approach. You're just hoping for higher prices longer term. You're not managing your risk. You're not adding, reducing. You're not taking advantage of all these. You might have a market that just goes sideways. You buy and the market just goes sideways for an entire year. And there might be 1, 2, 3, 4, 5, 6, 7, 20% rallies that you could take advantage of. The person that just buys and hold, they're sitting at the same place at the end of that range trade and didn't manage their risk, didn't take advantage of all the little moves. So we don't want to do that. So when you get up to pi, you book some, and now I think you can just wait on maybe one more push down before I'm going to add, because we got lower highs here and we're getting lower lows. So in the context of that pattern of lower highs and lower lows, after you make a lower high, the odds are higher that you're going to get a lower low. So like we talked about, the daily cycle still coming down. I think you could be patient for levels down here now to add back. I mean, if you got aggressive here and you sold well, then you book some, might as well add back. It's the same levels that you were buying before. But there's another great example of pie. Let's see on BTC. Talk about the bands more? Sure. You mean when you say contraction, do you mean when the bands kind of lay on top of each other? So just to clarify, I think so when we talk about the bands, that's these exponential moving averages. Or you can put simple period moving average. It doesn't really matter. The point is it just gives a good visual of the trend. I call it kind of a wave formation. So when those lay on top of each other, that's actually indicative of a range trade. That's all that means. I mean, so yeah, you anticipate a move either way when that happens. Is that what you're kind of asking about? So we were selling here on BTC and in futures just because of the cycle. So there's lots of different cycles. You can do the 8.6 frequency. I like to use the stochastic as an oscillator, as a cycle. I don't use it as overbought or oversold because you can have a market that's sideways and this thing still cycles. Like you could have a market that's in a downtrend, goes sideways, and you're still going to be cycling here, even though the market's not oversold, it's not overbought. So we view this as a rhythm of time. And it actually kind of lines up a lot of times with the 8.6 frequency. But an oscillator is actually an equation of motion. So I get into that in the training, which we get into. The origins of the model has a lot to do with physics, thermodynamics. It's the way energy moves, because markets and trading is just energy going through markets. It's very the same thing. So the cycle was just high up here. And so you have the pi line, which is a great concept, and then this oscillator here. If nothing else, time your trades around a daily oscillator. That's going to help you out a lot with your timing. We were taking profits up here. It was a good sales. There's a lot of little trades in between there. And these are all different sizes. So, what was I going to say? Yeah, so when the band's tighten, that's just indicative of a range trade. So you can kind of see that going on right now. I'll show you on the weekly level. So on the weekly level, the bands are starting to kind of converge. And that's because we're at the end of this consolidation or the apex. So as you get to the end of that consolidation, everything compresses and get to the apex. So the bands will start to kind of lay on top of each other. But here's a great example of that 8.6 cycle working. We've peaked 8 weeks up, start a new cycle. This is supposed to be a 4. I don't know why I keep saving that wrong. So we had a lower high 4 weeks in, and then we bottomed exactly 8 weeks later, start a new cycle, had another low, 4 weeks up, midway through, lower high, another low, another lower high. 2, 3, 4, 5, 6. 1, 2, 3, 4, 5. Yeah, so we're on a 6 week here. I think it's going to be important again next week and the week after that. We come into that 3rd week of September. It's going to be really pretty major. Does that kind of explain it on the bands? So the 314 period moving average, guys, is big. You put that on your charts, it'll help you out a lot. It even works a lot. I mean, we use it in gold and 15-minute chart. When we're day trading, we use it constantly on any FX chart. Yeah, we're definitely coiling. There's still risk though that we can break to the downside, which is going to be tricky because you're going to have to start playing defense. Then we're going to really see who has a risk management plan though. But I'm still a buyer though if we get back to 6,000 first. You know, I'm fine. Pretty bullish on the space overall. So if we buy it and it breaks, I'll just step to the sidelines and wait. Maybe get a better entry lower. So I wouldn't be afraid of 5,800, 6,000 again. I was just looking at the near term here for you guys. But so we covered the pie line concept, and then this daily oscillation is great to help you with your timing. So I use that. How do I use that? If I'm thinking about longer term trades or swing trades, which are 3 to 5 days, 2, 3, 5 days, couple weeks, that daily cycle is really going to help capture the majority of those multiple week runs. When we're day trading, we kind of tend to key off of the 30-minute and the 15-minute cycles. So you can look at a 30-minute chart. All right. So if you're day trading, whether you're trying to short with like one of these exchanges or you're using futures, but this is a near-term downtrend, no doubt about it. This is a real money candle that starts to move down. My guys know what that means, why that matters. But what you want to do is start your trades when the cycle's high or when it starts to cross. So you can be selling into this rally. You're in a downtrend. Cycle crosses. You had a really nice move down. These 30-minute cycles will sometimes be an hour and a half to 3 hours. So that's a good chunk of time to capture. This was a really fast move, obviously. But here, there's opportunities to short, cover. Get high within the cycle again. You want to start shorting your trades, covering. And so most people do the opposite. They don't know what to do until they see the red or they see this, then they want to short. after all this. Well, if you're selling here, we're actually covering a lot of this here on a move like this. Maybe try to show some stuff in FX. Let's just see what the market's doing here, guys. 1 second. Short a little bit of cable. I'm going to cover. The euro's coming back off. How short am I there? I'm going to cover a little bit of euro. Euro's back in the lows of the day, so it makes sense. All right. Dollar lira's collapsing. So use that cycle, the daily cycle, to help you with timing your longer term stuff, the daily and weekly cycles. The oscillator specifically I'm talking about. Obviously, you use the 8.6 count too. Well, let's look at some of these alts. I mean, let's just use Monero as one. And then we'll talk psychology of trading, because I think it's really important. Most of the crypto space is always trying to figure out what's going to happen next and what's catalyst or what the news is going to be. And that stuff is, you're chasing headlines and you're trying to always figure out what's next and make your decisions around that stuff. You're going to get all twisted up. I'll get rid of this. CoinEnergy's going slow. Okay. So when you get in these downtrends, like here you break the bands, but you also start making, you don't just have to look at the bands. You can see that we're making lower highs and lower lows. And those lower highs that matter are going to tend to be near like a 30-day or a 50-day or the bands. And that kind of defines your trend. So you don't want to necessarily be in the habit of buying lower lows all the time. You want to do the opposite, and you want to sell the rallies and cover into the lower lows. That's where it's easier money to make. Trying to buy lower lows, even if you buy well, it doesn't give you much of a chance to get out, and then it goes right back against you. But notice how, even though this was above the bands, that's not what's important. Is that you had a turning point. All right. This would have been great short or a hedge. Same thing here. All right. Same thing up here. Another lower high. So if you're shorting up here and then you're covering into these lows, that's pretty good timing. And now when that turns the corner, you're going to do the opposite. So if we can start to get higher lows, kind of actually we're anticipating maybe another higher low here. If the market bottoms, get another higher low around 100, be pretty bullish. But we want to see these altcoins start making higher highs and higher lows. And then you just do the opposite. Time this up with your daily cycles when you get low. Buy the dips, take some off when you get high. So just between kind of learning how to trade around pi and this daily cycle, you're going to really improve your timing and your consistency. There's a lot more you got to kind of put into it. Like, hey, how do I work my position size? Or when should I anticipate a reversal back to pi? Stuff like that. We teach all that in the model. We work on that when we're trading together. But guys, so let's talk this real quick then now on psychology of trading. So there's so much that, I mean, so much of trading is psychology, and it's what's kind of tough about being a trader is so much of the things that you learn in other careers or just in life in general, it's almost the opposite in trading. Like when you want to, if you want to improve your trading results in any other profession, you want to work harder. So you study harder, you work in harder, you put in more hours. You can't do those types of things in trading. Like you can't force the opportunity. You can't just get busier and trade more and expect better results. It's like the opposite. You have to be a lot of times more patient, trade less over a wider time frame, trade less size over a wider range of the chart. Helps you like if you're trying to pick up, like these are all different cycles, right? But if you're playing a longer term cycle on Monero, even though we're talking about a downtrend, that's one time frame. There's times that go contrarian and start to build a longer term position. But the way you do that is not by coming in here every day and buying the dip. I mean, you'd be out of money, out of buying power, completely broke if you did that. So trading smaller size over a longer time frame and what I call over a wider range of the chart, meaning I'm not getting aggressive here and then a week later I'm getting aggressive here. I'm thinking wide on the chart, like over a wide range of the price. Like I might buy 200 and then I might buy 150 and then I might buy 100, slowly working into a longer term position. But when it comes to, like we talk about FUD, fear and uncertainty and doubt. I don't really like those terms because uncertainty is not a negative, but everybody thinks it's a negative. Oh, the markets don't like uncertainty. Well, there's always uncertainty. And the fact that people don't embrace the fact that there's uncertainty is the problem, where if you're trying to convince, let me tell you why. If you're trying to convince yourself in your mind that a certain move is going to happen, you do something very psychological that's damaging. And you start to make a bias and you'll block out all the other information that's telling you, hey, I'm in a downtrend. I should be short or I should be flat. But you start to ignore all the information, the cycles, the trend, the support breaking, because you're so certain in your mind that, oh, this token's going to be up 10x or 20x, or, oh, this token's going to replace this competitor. It's going to be the next whatever. And so when you start to build those mental constructs in your mind, you will actually start to subconsciously block out all the other information that the market's trying to tell you. The market doesn't care about your opinion. It doesn't care about this project or that project. It's just ticking up and down. No emotion. It's not out to get you. It doesn't know how your last 3 weeks of trading went. None of that stuff. So we call that scenario building. It's very problematic in trading, is that you start to think that you know what's going to happen next, and you let the ego get involved. And that's why there's a lot of these smart guys on Wall Street, or, they come out of these Ivy Leagues and their whole lives they've been told they're so smart, and maybe they are, but they don't. A lot of times they're not good traders because their ego. They do their research, they form an opinion, and then they won't admit they're wrong, even when the market's telling them that they're wrong. Yeah, you were breaking this low. The market's giving you that information. You're refusing to accept it. You blocked it out. You got the ego driving, and you think you're so smart. You think that you've studied so hard. You think you've done all the research. You think you start to build in your mind what's going to happen. And then that feeds off itself, and you have to know what's going to happen next. What you want to do is the opposite of that, where when you totally embrace uncertainty, completely embrace it, and that anything can happen. You could go to the moon in an instant. You could collapse in an instant. You could go sideways forever. I don't know. You don't need to know. What you need to know is, where's my edge? Where's my edge in the market? What's my risk? What's my plan? How am I going to play it? Okay, I could be long right here on Monero, and I don't need to know if the next move up or the next move's down. I can still take advantage of it. Well, what do you mean, Jason? Okay, if I'm long and I buy into this dip right here, okay, and then it starts to rally, great. I got the opportunity to make money. If it falls into my support, what's my plan? Well, okay, if this is where my edge is, I know I'm going to buy more, and I'm going to lower my average cost. I know right where my risk is. I'm not trying to figure out what's the next news, what's the next catalyst. And then I'm not trying to trade based on that feeling or that need of having to know. All I want to trade is what's happening right now. So when I get a big fat real money candle, there's no thinking. There's no asking the ego, hey, what's going to happen next week? Or why is this not bearish, even though this candle is completely telling me the power is down? I don't need to look at the S&P futures and say, oh, the market's, this headlines are coming out, and the futures are down 20 handles. I'm going to have a bearish bias and scenario build the rest of the day as to why the market should crater. If you want, stop thinking like that. And all you want to care about is what's happening right now. What is the market telling me right now? Anything can happen. Oh, I got a real money candle. I broke the lows. Okay, I'm going to go with it. Short, stop above the high. I get 4 candles push in a profitable territory. I cover. I'm waiting for the cycle to come back up, and then maybe I reshort. Cycle's low. I sell into this rally. I know this is my prior stop. I move that down to the pivot. There's no ego. It's just what we try to teach is let the model trade. You're setting your ego aside. Does that make sense to you guys? You got to get away from this feeling of needing to know what's going to happen next. Like, I don't know. And then once you have that, I don't know. Yeah, that might happen. Yeah, it might go down. You stop trying to figure out and guess, and just trade what is. What's the cycle telling me? When Bitcoin was up there in front of the trend line, I didn't need to figure out where the whales are, where the sell orders are, what's going to happen by the end of the week. There's no thinking. It's just the cycle's high. We've had a good run. Maybe the RSI is overbought. We have had an 8 count. Okay, I take some gains. Boom. And that's how we end up selling a lot of times at good levels with good timing, because you stick to a process. You're not chasing all the noise in the market. But scenario building is very, you see that a lot on a lot of the coins because people get attached to them instead of realizing, all right, this coin's had a good run. It broke. It's in a downtrend. I'm just going to go to the sidelines on it. I'll come back to it when things change. Don't have to stay married to the position. But so there's always going to be uncertainty. You never know. You can never have all the fundamentals ever. Because let me just tell you guys something along those lines. If God himself came down and told you what the price of ether is going to be 5 years from now, what if he said the price is going to be 10,000? Does that help anybody in December? If you know that the price is going to be 10,000, it doesn't help you. You put in $1 million on the highs and you just sat through an 80% drawdown. Most people can't sit through that. So now you just completely drew down all your capital. Most likely after that much pain, you sell the lows. The question has to be, when does the market go to those levels? And you have to have a timing process. What if the market crashes, goes sideways for 9 years, and then in the last year it goes to crazy levels? For 9 years, you miss all these other opportunities. But there's lots of times, especially when you're day trading, if you can't scenario build. Well, this might happen, and then this, and then this, and that, and this is why I'm bullish. Because you'll just end up fighting a trend, and then you look back at the end of the day, you lose a bunch of money. You're like, man, all I had to do was flip and go with the trend when it broke right here. And I had built this up in my mind that it was supposed to reverse. Anytime you start telling yourself, oh, the markets should do this, or it's supposed to do this, that's the ego trying to tell you that you're so smart, you got to figure it out, telling the market what's supposed to happen. Meanwhile, all you're getting is lower highs, or the cycles are all down, the trend's down. That's what's happening in the moment. That's the reality. What we think is going to happen, or what we want to happen, is not reality. The reality is all trading in the now. And that's what they call trading in the zone. That's what's called embracing uncertainty. And just get rid of that whole idea of having to know. Oh, anyway, there's kind of lots of little stuff like that on the psychology of trading. Guys, there's a good book, Trading in the Zone. Mark Douglas probably sums it up really good. What was the other one? And then you get into these ideas of probabilities and edges. Because there's lots of stuff where in psychology trading, where if you've had a bad streak, you can tend to let that kind of feed into your confidence. You get shy taking the next edge, when really this particular edge, like I'm just staring at the dash chart for whatever reason, but this cycle's high, you're right at the bands. If I had a lousy bunch of trading and I miss all these lower highs, or I'm on the wrong side of the market, that doesn't change the edge here. When the cycle's high, you're in the downtrend. That was a perfect spot to be a seller. So trying to define your probabilities, trying to define the edges, it's kind of just the stuff that we work with. What else is moving today, guys? Do you have any other coins you want to look at? The euro's do you get new lows on the euro? Yeah, slightly. 0x. All right, Ripple, Stellar. Stellar's been pretty strong this year. Just give me 1 sec and we'll check out those tickers. Come on. Gold's coming back off. We sold that rally pretty good earlier today. I can show you guys a lesson there. Euro Kiwi's back up. Euro yen's coming off. Sold Aussie well too. Yeah, Aussie's getting smoked. So is Kiwi. One second. It's back on the lows. So guys, try to catch yourselves. Ask yourself, and is the ego trading here? If you find yourself saying, I think, or I felt like this, so I did this. I thought this, I felt this, I think. This should happen. This will happen. All that stuff. That's the ego trading. You want to be talking like, if you're on CNBC and it's like, what do you think of the dollar Swissy here? Well, based on this and the fundamentals and this one-dimensional aspect of the trade deficit and what we got going on in the Swissy and the central bank's view based on what they said in Jackson Hole, we'd like to sell. We're buyers of the Swiss and we think dollar's overvalued. Okay. I mean, what kind of definable, repeatable edge is that? Or you can say, well, when we look at the weekly time frame, it has nothing to do with my opinion. We clearly price broke the pattern of higher lows on the longer term time frame, clearly making lower highs and lower lows longer term across several durations is bearish trend. When we think about it in terms of a timing perspective, the cycles are low. So how do we play that? We'd rather be better sellers. We're waiting on the cycles to come back up. Then we'll try to lay out some short risk. And our risk is above this particular high. It's the highs from 2 months ago. This is where the trend broke. On the downside, we think we have a good chance the monthly cycle to play out, the test, blah, blah, blah. There's no I think or I feel like this, central bank should do this. I feel, I think they should do this. That's all ego. That doesn't work. Anyway, I think you guys get that. Just kind of pay. It's kind of you can kind of see the level of the psychology of trading that somebody has by the way they talk. Most of the really good traders will say, I don't know what's going to happen. I can tell you where my risk is. I can tell you where I think I have an edge. I think if the market breaks this level, I'm going to add to it. I'm a little bit short now. I might be wrong. Anything could happen. If we trade above these highs, I'm just going to go to the sidelines, cut my risk for now. If this breaks, I'm going to add to it. You know, this is trend is happening. This trend is happening. These are things that are reality. The trend is this. The trend is that. It's not my opinion. It just is what it is. I'm going to cover some more euros. All right, I think I'm pretty square. So you guys want to do first Stellar? It's 12:30 already. Oh, I got 0x, I think. Here, let me switch charts. So kind of start with a top down. So start with your longer term time frames. I know 0x hasn't really been around that long. I just kind of like to get the bird's eye view first. So we don't really have any data for cycles on here. This is Binance. Bittrex might be a little bit longer, but it's fine. So these are your prior lows, higher low, higher lows, right? High, here's a high, higher highs, higher highs. So you're in a long-term uptrend. You can see it easier on the weekly. Now look how nice the cycles are playing out. Like this is just beautiful. Right? You don't need anything fancy to just see. Should be more like this, but so there's a swing line here. I'll teach you guys that in our trading course. Boom. Swing line setup, buy, stop below low, below the previous day's low. Trail it out. Swing line set up the other way. Intermediate term downtrend. Boom. Bullish engulfing pattern right at the bottom. Add, stop below the low. Swing line setup. Another nice run. Bearish engulfing the other way, just the same as down here at the bottom. Same thing at the top here. Tweezer tails. Double tops. Cycle back down, take out the prior week's high, boom, another rally, bearish engulfing, back down, another swing line. So this is one of our favorite names. This is one of the coins that's been the strongest for a long time. Great project, yada, yada, yada. Still in a long-term uptrend. Our cycle was low on the Stoke, right? Stochastic cycle is low. I bet if we had a monthly cycle up there, it would be pretty low. You go to the daily. What do you guys think here? Now, I started teaching that pie line concept. You're just starting to get that data show up. So this coin's just a baby, you know. It's not just a little over 314 days old. Hopefully it's got a long life ahead of it. But we cycled away, back to it, away, back to it. So these are levels we want to be buyers at. Now there is some risk right here if we don't hold this zone. that maybe you go back to these lows. But this is versus BTC, so it's not entirely the best directional representation. But I'm a buyer for sure. You just need the market to kind of turn around. You're getting the bullish engulfing right here, which is bullish. When we look at it versus the dollar, you see much more support in the market. I mean, I look at these as areas, guys. These are long-term buy zones. It's crazy to want to like, it's kind of when you're trying to play for like maybe a 1 to 2 year move. Why would you be getting all frustrated if you broke this low and wanting to stop out when you've got the major low right here, like backing it up? Like, are you gonna sell right there just because you had one candle or 1 week went? And that's crazy. You got to think in terms of, you got to give your coins room to wiggle. You can't just put them in a straitjacket. So you treat that like a zone. This is a buy zone down here. I like it even wider. You want to be accumulating down here. You know, most people want to buy here. And that's psychology of trading too. You got to get used to sitting in negative territory. Most people want to buy something and they want it to go immediately in their favor. The good trader wants it to actually go against them first, because I can only buy so much here. The market's just too extended. I know that the probability after this big of a move is I'm going to get a retrace. So I can't get heavy there. I need a pullback. I can start my trade there, but I know that the market's got a good probability of pulling back. And I want that pullback. I want to buy the stuff I like cheaper at better levels. I want the pullback. So that's kind of psychology of trading. Got to get comfortable in being in negative territory and wanting the market to actually come against you is again, that's something you got to kind of flip upside down. So we're still in a long-term kind of contrarian mode. To get the momentum back positive, you got to get above the bands, and the intermediate term's got to start making higher lows. And then we can get more aggressive on dips. Right now, I like these levels here. I don't know what happens when I do that. This is good support. And again, I'm a buyer even back at 40 cents. This daily cycle's coming down just like Bitcoin. So we haven't been in a rush to buy. I haven't bought anything the last couple days. What else did you guys say? I think someone said Omise go. Oh, Stellar. My eyes are burning. All right, so this is versus BTC. Same thing. You're back to the pi cycle. So it tells me you're probably due for another longer term run. I like these levels back here. I mean, just as simple as that. Let me see if I can get it versus the dollar. If you see a bullish short-term signal on the alt chart, but not on BTC, what do? Alts are just following Bitcoin, so it's very risky if you buy the BTC drops. Well, I would say that the altcoins are worse than just following Bitcoin. They're underperforming. So again, it's all relative. Altcoins are cheap right now, but they've also been making lower lows. So it's totally, it depends how you play it. You have to have a longer term time frame, and you got to be patient. If you're going to start going contrarian against the trend and trying to pick a turn because something's cheap, that's totally different than trading something that's in an uptrend with the cycle. I can be aggressive on the stuff that's in an uptrend if I'm a buyer. I can't be aggressive on stuff that's making lower lows. You're going to find that out the hard way. So when something's cheap, yeah, I mean, alts are really cheap right now, and they're going to have a massive rally at some point. But it's the timing thing. You're going to need BTC probably to start making higher highs before alts rip. So I tend to I want to pay attention between the spreads between those on a relative value basis. So relative value mean is Bitcoin or the alts cheap versus BTC? Is a 5-year bond cheap versus a 30-year bond of the same instrument? That's relative value trading. Is the euro cheap relative to the pound and the dollar? So you want to kind of pay attention, but there's never one thing that's going to give you the signal. So you want to just trade the altcoin chart like you would trade anything else in the model, first of all. But then if you get stuff to levels that, if you get Cardano at 5 cents, that's a contrarian play that I want to take. I want to be a buyer at 5 cents. But I've also been really patient on the way down, kind of buying into that for the longer term. The time to get aggressive on your size is on stuff that's in an uptrend, which there really isn't that much right now. Actually, most of this year, anything aggressive has been on the short side. So I don't know if that makes sense. As far as Stellar here goes, you're pretty good base. It's really only 20 cents? It's just like the whole market. We're still basing. This is actually trying to put in higher lows, but you don't have higher highs yet. So you can nibble, you can trade it around, but until we get above 20, really until you get above a quarter, you're not going to get any type of momentum. And that's going to be, Bitcoin's got to make higher highs before we start seeing that. But Stellar's actually on a relative value basis been one of the strongest. So it's probably going to, it might not have the biggest returns off the low as some of the coins that are just been getting crushed, but it's probably going to be one of those coins that does really well in the next bull market. The stuff that holds up in the soft markets, those are probably going to be your leaders. Zen versus BTC. This kind of has a weird longer term arc playing out right now. I just kind of eyeballed it, looking at these lower highs. I don't really like that it's kind of below pi in the 200 longer term. So that's your range, God help the people that are chasing these longs up here. These dips were good. You had more of an uptrend. Now you're kind of losing that posture. But even though you poke below this low, I mean, you came right back up. So you can still, I mean, you definitely didn't want to be buying here. You would rather be buying now. You just got to kind of watch that low. Let's try to get it versus a dollar too. If I can, I might not be able to. We don't have that one versus the tether. Oh yeah, yeah, we do. So you don't really have on this exchange, you don't really go back far enough. I guess the same thing. You're watching the support though, just like we said on versus BTC. I think there is some risk below $15. So it depends how you play it. I mean, you could take half your risk off. You could go to completely the sidelines if it breaks that low. But you do have got pretty good risk reward. If this is where your low is, you're risking this amount to make maybe this. Maybe you get back to these highs. All right, guys, I'll do one more. I already did EOS, Andy. Sorry, I did the EOS at the top of this this video, or last live stream. I don't know if I recorded. I don't think I did. I think I did. I think my guys though, Andy, are gonna put out just a short write up, an EOS update, because I did get a bunch of questions on that. I'm bullish. There's just being a little bit patient on the timing to add back, but we're still very bullish at that coin. Misago just can't get off the. We broke the base, kind of like Litecoin did. Well, actually, Litecoin's kind of back at its long-term base, but we broke here and still been making lower highs. I don't know what. There's not much here on the chart to support this. I mean, just basically free for all if you break 320 between here and zero. You got another cycle turn kind of coming up with this. It's that same September timeframe, the 18th. Oh, I had to cut my risk when we broke that base. And I haven't gone back in yet. I'm just not in a rush. I mean, it's cheap. I think it might get cheaper. We've got this pivot now is at $5. So that's the lower high pivot. Cycle was high up there. If you want to play for a double bottom, 320 maybe. Not a bad spot to add some back. We basically failed right in front of Pi. Yeah, 3 1/4. Well, anyway, guys, listen, I hope some of you join us in the chat room and join our trading team. I just encourage you. I mean, if you're if you guys like trading, there's going to be a lot of opportunity in blockchain next 2, 5, 10, 20 years. So, I mean, I just encourage you. I probably went down so many dead ends and a lot of frustrating days. I mean, I know what it feels like to make $8,000 on the desk or have a good $20,000, $30,000 a week and give it all back because of just simple things like pressing and not having an understanding of cyclical stuff. And so there's so much aggravation and lost money that trying to learn it on your own, it's all, I mean, I've made every mistake you can make. You're always trying to get better and just keep working on your, you know, your craft. But there's just so many things that you can learn. I mean, in our course and in trading with us that you're gonna pay for it either way. You either learn in the market and it's usually cost you a lot more. You know, I've blown up accounts in the very beginning of my career. Luckily, I traded enough early on that when I started trading on the desk, I mean, I've had sideways months or months where I didn't make any money, but I didn't have a losing month. And that's just tough to trade directionally. Not a lot of people can do it. So we have a pretty consistent team and guys that have had a lot of good results that I'm proud of. So I just encourage you guys, if that's what, if this kind of resonates with you. I mean, I paid 12 grand to learn to trade Forex, and it was just a weekend type of thing. I was brand new to the market, but I pulled out a couple things that I knew that, all right, if this is a market I trade for the rest of my life, I'm going to make way more than 12 grand. And so it's just kind of what, if somebody thinks that's not a good enough investment in their self, 2,000 or 3,500 bucks. I mean, to me, people spend more on a TV than investing in themselves. And once you have these concepts, I mean, you can apply it to the Dow 10 years after this run. You can apply it to the dollar, to the euro, what's going on in Turkey with the lira. There's so many opportunities. So anyway, that's kind of what we do. And you guys can come in the chat room here too if you got questions on signing up. But yeah, I would just encourage you to get started. I mean, September, October is going to be, I think we're going to have a lot of volatility now that everybody's back. Europe's back from vacation. There's a lot of stuff going on in the banking sector. There's a lot of risks out there. So I think we're going to get a lot of vol and some good trading opportunities. I mean, just being around us and what we were doing with Tesla, you could have made back any of the stuff that the courses cost just in this one trade alone from this last couple of weeks. Just simple cyclical stuff that we use. I have an options course too, if any of you guys are interested in that. I teach on the model and then I teach these put spreads. But we just came in, sold the top of the cycle. I used a put spread 315, sold the 290s. This is a huge trade here. We covered that and a lot of that into the lows. I still think we can go back to like pi here, 217, 218. So I'm still sitting on some 250 puts. What are you guys doing this weekend? Anything? Well, you guys are all over the world. I'm in South Florida, so I don't know. We got some hurricanes brewing. Hopefully they don't head our way. So I might try to go get some golf in before. It doesn't look like next week's going to be pretty rainy. Unless I think it's Fletcher. Is that the hurricane out on the Atlantic? Or Musk? Elon out there in the Atlantic? If that turns hard left, then that's going to suck for us next week. Oh, yeah, you got some bots you're doing? Yeah, that sounds cool. New house is exciting. Just shoveling rock. All right. A good workout. I'll probably end up doing that too. It's always something to do. Just freaking shoveling sod around. All right, guys. Well, hopefully some of you had a good trading week. If not, let us come help kind of get you squared away. On the analysis side, you got to get the price, the trend, the timing right, and the cycles right. And then you got to figure out, okay, now I understand how to view the edges. Now what do I do with the edges? How do I work my risk? How do I work my size? Where's my stops? Where do I add? Where do I reduce? Where do I get aggressive? Where do I play defense? What's my trading plan? What's my max loss per trade, per day, per week? What's my average win rate? What's my risk reward? Am I letting my winners run? Am I letting the market take me out? All that stuff. You got to put it all together, but it's simple concepts. And the nice thing about the model is you just do it over and over and over again. And it just becomes kind of a part of you. And it's not, then you don't come into the market like, oh, I'm so confused. The 4 hours this, the hourly is that, the 5 minutes this, ETF this. Oh, I got all these things and I'm confused. You're all over the place. You get it to where it's methodical. You take the ego out. You let the process drive. And then it's just a process of getting rid of the bad results. Like we don't sell lower lows. We cover in lower lows. Most people chase the lower lows. Getting rid of like habits like that, pressing into the lows, waiting for the cycle to come back up before you start getting aggressive again, before you start reshorting. You pull out all the weeds, and then that's where the consistency starts popping up. Most people go down the path of making all these mistakes, have a lot of bad trading habits, and then they're not even aware. They never even do the work. They don't journal. They don't try to write down what the hell they're doing wrong. So they just keep doing the same stuff over and over and over. First, you got to identify what you're doing wrong, which that's what's great about the coaching is we help you do that. Like, have you thought about this? Oh, I didn't think about that. Yeah, if you thought about it, you wouldn't be having the problem. You have to get somebody outside of your own head to help you with that. If you had all the answers, you wouldn't keep doing it. Oh, okay. So that's what I can do when I'm in this situation. Or oh, now I see what I'm doing wrong. And then you just start getting rid of those bad habits, and your trading gets so much better. So anyway, guys, thanks for hopping on. I'll be back Sunday. I'll see some of you guys in the chat, and then hopefully some of you guys will see in the room Tuesday. All right. All right, Doug. See you, man. You're welcome. You're welcome. All right, guys. Have a good weekend.